Today is a pretty nice day for the altcoins. Pretty much everything is going up, but one token is doing better than the rest, and that's Arbitrum. The question is, why is that? Is there something fundamental going on? Is this just a pump and dump orchestrated by the whales? Let's have a look at the data most people are not considering. Now, first of all, there is news around Arbitrum because the centralized exchange Gemini announced tokenized stocks trading on Arbitrum, starting with MicroStrategy stock. Now, a few years ago, the centralized exchange Binance already launched something like this. They allowed trading of Microsoft stock and of Tesla stock, etc. But at the time, the SEC did not like that at all, and they shut that down. Binance had to pay a penalty and had to also quit that program. But now the SEC is much more friendly towards innovation. So let's see where this is going long term. Trading volume is definitely up. So in the last 24 hours, we had 71 million worth of trading volume for the ARB token. And on the perpetual futures market, we even had 374 million of trading volume. Now, besides that new narrative, right, tokenized stocks on Arbitrum, is there long-term growth in the Arbitrum chain if you look at usage, if you look at capital, etc.? Is Arbitrum a good long-term bet? Let's first have a look at the capital that's on the Arbitrum chain, also called total value locked. There's now 2.5 billion of value on the chain, and while there's a lot of volatility in that number, it tends to grow over time. We can also measure the total value locked in Arbitrum token, so in ARB, and that's even more constant growth. Here's the decentralized exchange trading volume over time. So over years, this tends to go up. This is now measured in US dollars. And here's the number of active addresses per day on the chain. There was a peak 1 year ago when there was also a lot of Memecoin trading on Solana, etc. A lot of retail interest. Since then, we have come down somewhat, but year over year over year, we tend to still see continued growth in the number of active users. So we're looking at the long term here, not just what's going to happen tomorrow or 1 week from now. Here's the amount of stable coins on the chain. We had very constant growth up until the end of the year. Then things came down and now we are stabilizing somewhat. Now, the ARB token was launched via an airdrop to all of the users of the chain. The chain was used via Ethereum. Ethereum was the gas fee. And then the governance token, the ARB token, got airdropped. Thus, we've got a lot of holders on chain. So that's almost 1.5 million wallets that currently hold the ARB token on the Arbitrum chain. We've also got a version on Ethereum. Over here, we've got 51,000 holders. What we see over here is the number of small holders versus the very large whale holders. Something in between in the middle. So the way we make this distinction is by looking at minimum holding thresholds. For the chart on the left, a wallet has to hold at least 3,000 ARB tokens. For the chart in the middle, it's 30,000 ARB tokens. For the chart on the right, it's 300,000 ARB tokens. So that's equal to $1,000, $10,000, $100,000. We see the initial airdrop where everybody got ARB tokens, and then half of the people, roughly, maybe a bit more than that, sold off their airdrop. So that happened until the middle of March of 2024. Since then, the small retail investor accumulates again, and the larger investors actually never really sold their airdrop. The middle of March, by the way, was over here. So just before the price went down. Isn't that fascinating? Suddenly, small retail accumulates up again, and that's when the price goes down. Now, that's the numbers on the Arbitrum chain. Here are the same numbers on the Ethereum chain. The long-term trend is clear. There is accumulation across the board among small retail and among the whale. Now, here's the problem. A price is always the result of demand and supply. And obviously, the investor base is growing over time. There is constant demand over time. But why does the price not perform accordingly? It's because of the supply. The supply of Arbitrum is also growing, and it seems to be growing faster than the investor base. Have a look at this. This is the number of ARB over time. We started with 1.3 billion tokens, and now we are at 4.3 billion tokens. We've already looked at ARB in US dollars, and we do have our rallies every now and then, right? 200% over here, 150% over here. But a lot of that price appreciation is actually the general macro itself going up. So all of crypto going up and bringing Arbitrum with it. Because once we adjust the chart for the macro influence, so we look at Arbitrum relative to Ethereum, now the underperformance is much more constant. We've seen a decline in the Arbitrum price since March of 2023 versus Ethereum by 80%. And that's not really a surprise when there's so many new tokens hitting the market regularly. Now, there are multiple ways to get exposure to a price in crypto. We can buy this directly on the chain, we can buy this on a centralized exchange, or we can use bets on the price with leverage through perpetual futures. What I find fascinating is that the perpetual futures market long term is not bearish on Arbitrum. So on average, most of the time, the longs have to pay the shorts in order to get more price exposure. It costs money to bet on rising up prices. In other words, if you're betting on this to continue to go down, you're also getting paid in terms of financing costs. There is some correlation between the spot price of Arbitrum and the open interest on the perp market. So if there's more open interest, the price tends to go up as well. And with the recent price rally, we've also seen a lot of new bets on the price. But in general, it seems like it's mainly the longs that get liquidated because the majority of people that bet on Arbitrum are rather bullish on the price. Now, it's quite common that altcoins tend to underperform versus the major benchmarks, versus Bitcoin, Ethereum, and Solana. For example, have a look at this. This is Optimism. It's within the top 100 largest cryptocurrencies, and it's just doing worse than Ethereum constantly. But we can also flip that chart around, right? This is now Ethereum relative to Optimism. So we can make money when most people are losing. Or have a look at this. This is Balancer relative to Ethereum. Again, when we flip this around, we've got a very nice performance chart. And the story is always the same. This is the token inflation of Balancer. This is the token inflation of Optimism. It's all going up over time. The early investors, the team, the insiders, the KOLs, they are all offloading over time. They get allocations, they get vestings, they might unlock their tokens a few months or years after launching of the project. And that creates constant sell pressure. And that's why we see so many altcoins doing so poorly long term. The demand for altcoins in aggregate doesn't grow as quickly as the supply does. Whenever I show those token supply charts on this channel, it's all from Tokenomics AI. So feel free to just go through that website, check out how much additional demand there has to be for a single altcoin just for the price to stay flat. Usually the altcoin demand isn't as high as the additional supply that hits the market. And so that's why the majority of altcoins is red over longer periods of time. That's why Bitcoin outperforms most other assets, because Bitcoin can't inflate like all of those altcoin projects. The Bitcoin inflation is only 0.8% per annum. Ethereum has currently an inflation of 0.7%. And most of those altcoins have much higher token inflation. That's why they are down. And so that's how I personally navigate this market. I'm simply betting on falling relative valuations. I'm of course not sharing the individual positions over here. This is part of Premium. It's down below, thebitcoinstrader.com. But in general, it's about having the odds in our favor. We don't want to try to pick the needle in the haystack, the 1 or 2 or 3 altcoins that go up. We just bet on the majority of bad tokens continue to stay bad, right? Why would they suddenly turn around when there's so much new supply hitting the market regularly, at least in aggregate? On average. Here's my performance in the last 2 months. So this is now via perpetual futures. I'm going long the asset that I'm long-term bullish on, and I'm going short the asset that inflates crazy like this and that just continues to go down long-term versus the benchmark. And so our community, of course, does very similar trades as well. This is the Share Your Wins channel where people show what kind of altcoins had been shorted and what kind of returns are possible. And it's all about risk management, right? Let's have a look at this. Stop loss move to 1.1, let the rest run. Because while it's nice to have the odds in our favor, it's still important to have proper risk management in place. If you get completely wrecked just because of a single short squeeze, just because there's short-term manipulation in a single asset in a short period of time, you don't want to lose everything. You want to have proper risk management. I'm of course sharing my personal trades in Premium as well. So this is a screenshot. This is the kind of opportunities we are looking at, right? We want to be in a long-term downtrend and ideally at the top end of that long-term downtrend. And then we open a short over here and wait for a quick dump to then take profit to then go on to the next poorly performing altcoin. Have a look at this example here. This is where I shorted WorldCoin We got some nice individual gains here as well. And of course, the community copy traded that as well. So of course, I don't encourage just to blindly copy every single trade that I do, but it can be a first start to make initial gains. Again, before starting any of these kind of approaches, make sure that you learn about how to properly do bet sizing, how to do proper stop loss setting, how to also trail those stop losses over time. So there's this video here, risk management with relative valuation bets. You can also check out this video using perpetual futures on Hyperliquid to bet on relative valuations. Both videos are roughly half an hour in length. So feel free to join us. It's currently $125 per month. There's also a 1 week money back guarantee. So in theory, you can just sign up, you can watch all the tutorials, and then after 6 days, you decide it's not for me. You can ask for a refund. I'll refund everybody, no questions asked. But of course, I hope that you will make money simply just by getting inspired by the community and by potentially copy trading me, and then stay subscribed. So feel free to check it out. The link to premium is directly over here. Just click on that. It will lead you to the sign up page. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.